Hello, Dave Knight here from 123daytrade.com. Thank you for watching. Thank you for being here. I just want to, we are moving on. It took me 18 days to get through step one. Spreadsheet here. I don't know if you can see that. Let's see if I'm, there it is over there. 18 days. The winning trade today, we're going to talk about the winning trade once I get it up and running, um, was 47 ticks. And to move on, basically all you got to do is get above the 2000 level. You can see the market's coming off the lows right now as we finish up the trading session here at 1:30 Central Standard Time. All you got to do is get above the 32,000 mark to move to the next step. So step one, it was formerly called the combine at TopStepTrader. Now we'll be moving to step two, which is formerly called the funded trader preparation. So let's talk about the trade today, and we're going to make this a live video. So let's go back and talk about it. So the trade itself came in at the winner that I was able to catch came in at 806. So let's go back to 806. All right. So here's 8 o'clock when we're coming in the morning. Now this ends up being my spreadsheet that I used to make my decision today, and you notice that I put the high in at 34.81 and the 1.5 P target that I was looking for was 34.33. I knew I needed 34.29 to move on. This move actually went down to 2P before it even showed signs of turning over. As you can see right here, it runs 34.17 right here, but not through it. So honestly, you would be protecting the 1.5P mark coming back up if you're in your rabbit still. I knew what I needed to move to the next stage. I know I had lost, as far as the trading went today, I opened up with a one tick winner, I believe, and then I had I think a 5 or 6 tick loser, and then I knew I needed 40, well actually I guess I needed 46 ticks on last trade, but I went after 47. So that was the target that I had put out here, 47 with a 13 tick stop. What does that mean? So really, honestly, if I knew that I needed 48 ticks, 47, I knew that the market could go basically from any top, a good range of movement coming back down is a 1.5 P. So how do you measure P? How do you measure R? Well, I measure R as average range of movement. So in this case, today we came in with one R, 26 ticks. It looks back 9 days worth of data. And what you see here is, get my screen draw tool out. So what you see is this right here, that level right there. And what does all that mean? Well, it coincides down here. What this is telling me is the average range of movement or average velocity I expect the market to move is 31 ticks before making a move another way. So over here. Average range or average risk is 26 ticks on a 1R. Now Van Tharp talks about this extensively in his books and his series and in his webinars and all his content. Trade Your Way to Financial Freedom, for instance, one of his books, he talks about define your R and many of his terminology. Define what 1R means to you. 1R to me in the crude oil market today, looking back 9 trading days, means 2.6, which times 10 is 26 ticks in this case. $260 is the average risk of that you would need if you had a big blow, big account. You'd be going after. Usually, you'll see me trading what I call is 1/2 R. So 1/2 R versus 3P is how I usually set up my trading session. In this case, setting up today would have been 95 ticks for the win side with a 13 tick stop. So if you look here, that means that the market, I was looking for the market to move to 33.86. Did we go to 33.86 in the session. Now it did come back up and through, most likely knocking you out. But right here, if you were able to stay within it, if you just set it and forget it, and let the trade move, what you'll notice is that this low right here was 33.82. Now the market ends up going to 333.8 a little bit later in the session, I think right here. So it stair-stepped its way down. Ideally, what you saw happen in the trading day is you saw it come off its top. So it went up, went to R1, came down, went up a little bit, came down again, went up a little bit, came down like this. And then now you see the ABC retracement. So if this was a 0 point, it was a perfect setup today as far, excuse me, this should be a 3, 4, 5. And then you had ABC correction coming into the end of the session today. A really good 0, 1, 2, and you're trying to catch, I like to try to catch this move right here, the 2 to 4. And then if I don't catch that, I like to catch the 4 to 5. 3 to 4, excuse me, this move right here going 2 to 3 or the 4 to 5. Now another way of looking at it is a 1, 2, 3, and you're trying to catch the 2 going to 4, but the way you really need to look at this particular sequence with Ralph Nelson Elliott is looking at it like I just showed you. So you see up here the top comes in, it ends up becoming your 0 point on your daily chart. Now inside of each day or series, there's all kinds of 0, 1, 2s, all kinds of waves. Ralph Nelson Elliott being the wave theory guy. So this is what it normally looks like when you're 0, 1, 2, comes down to makes a 3, goes back up, usually does not cross over this, so it would look something like this, meaning these points don't get crossed. The normal, the only one that could get crossed is this one right here, going 1, 2. This would be the 3 point. This one coming back here could move up to here and then go back down. That was some of the advanced things that Ralph Nelson Elliott talked about. But wave theory is the concept that he uses, and you'll see me using that a lot in my overall picture. So the three things that I believe in is momentum, right? Price action is basically what that stands for. You have your waves, so the momentum of the wave. Then you have the volume. You'll see a lot of times I trade with what I call volume, right? So I need volume to come in to the trade itself. So volume, momentum, and then I need another concept called velocity. Velocity means I need the average range of movement to give me enough room for profit. So profit is huge in this game. You want to, every trade that you put on, you want to make sure, at minimum speaking, you're trying to go for a 3 to 1. That's kind of 3 meaning profit, R meaning risk. I always set up a 3 to 1, but if you look at the way I'm setting up with 13 tick stop loss, and then that was at 95 today. Let's go back here and look. We'll have to stop the screen share. So today, if you look at the way I set up my 3P, it's 95 divided by 13 is 7.31 to R. Normally I'm looking at 1.5P, so you look at 48 ticks divided by 13 is 3.69. Now, depending upon if you can get the top of the market, right? I didn't get the top, but I got pretty damn close to the top on that entry point. We're able to get in at 806 once again. Let's go back and look at 806. So 806, we come in right here. We use the R1. Our stop is a little above the R1. I could have physically waited just a little bit longer, but I knew I wanted to be involved in this right here at the R1 mark. So I knew where I wanted to go in. I knew where the high was. Why is this important? Well, if you go back to the hourly chart, what I was looking at was where were we last? And I was expecting some supply above this high that comes on May 21st. And pretty much that's what happens, right? It moves up here, first time up and over, as far as your eye can see. and the supply hits, you get up here, supply hits, and down it goes. And this is kind of the day trade area that you're looking for. Sam Seiden talks about supply and demand. Go look him up. Seiden. Some good information you can find online through YouTube as well on supply and demand. But I expected supply above the high of May 21st. So that's why I was aggressively looking at getting involved up here. Now, if it would have failed this trade, if this trade right here would have failed, I would have stood aside and waited for volume to kick in. It did kick in. It was good, and we took advantage of it. And as far as the way the bars formed up, at 8 o'clock, you see 848, 805, and then this one coming in at 104. I could have shifted this, but the bottom line is the market was showing positive 979, proving to, in my opinion, that a top reversal, my favorite trading signal, is coming in the market, and it's all before the R1 mark. I am an aggressive short side trader, dark side trader in front of the R1 mark. After R1, not so much, and especially above R2, I really have to see something big to want to get involved in a trade. So this one here ends up being the trade that wins. So I come in here, and the exit comes at 821, right here, at 34.29, and this trade right here ends up earning 47 ticks. And enough movement to get me to step 2, or funded trader preparation. All right, I used these volume bars. This is the volume that I use to help me want to get involved. Blue, 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 blue. It actually sets up what I call the 5. So if you're looking for a technical setup of what I look for, it set up what I call the 5. And you can go back and look at my content on YouTube. Just search on my channel called the 5. And you'll find a trading tip that I call the 5. But this is the 5. 1, 2, 3, 4, 5 above 500. All right. Hopefully that helps you. This is me moving on to step 2, and then getting going. And I'll be selecting the pro funded account next after I pass step 2. Going to get that 5K this time. Rinse and repeat. I'm going to go back to step 1. Step 2, and then go into the pro account again. So I'm going to take all that money, and I'm going to use that to get me back here to step 1 and go through again. That's the goal this time around here at TopStep Trader. Second time through, we'll turn it into a real money account and trade in the funded account. We'll take the extra that we have, do whatever we want with it in that case, okay? Dave Knight here from 123 Day Trade. Thank you for watching. Thank you for being here today. This was I'm gonna put this up on the live as a premiere video, and we'll see you on the next time I put a video together. Bye for now.